So in this video, I'll be explaining what a cash flow forecast is. If you're a quantity surveyor, an engineer or project manager, or any other construction professional, you need to know what these documents are. So keep watching this video to find out. Now, before we get into it, if you haven't already done so, please consider subscribing to the channel. And if you do, remember to hit the bell, so when we release our new content, you'll get that notification. Right, so let's get into it. Now, you might have heard of a cash flow forecast, but you might not know what they are or why they're used. But first of all, I want to start looking at what a cash flow forecast actually is. Now, a cash flow forecast is a document that a business or a construction project uses to plan how much cash it will receive in and pay out over a given period of time. Now, this period is typically 12 months, but it can be done monthly, weekly, or over the course of the construction project's duration. It's just a matter of choice. Now, cash a company receives in is called cash inflow, and the cash it pays out is called cash outflow. Now, when a business or a construction project produces a cash flow forecast, it enables them to calculate their net cash position. Now, the net cash position is determined by looking at the starting cash position, which is the net cash position at the beginning of the cash flow forecast period, and then projecting forward from that point by comparing the cash inflow with the cash outflow. Now, this will enable businesses to see whether they're going to have enough cash to continue to operate. It's unlikely that a cash flow forecast will align with a profit and loss statement. Now, the reason for this is that the period when an expense is incurred may not be the same period as when the cash is paid out. And by the same token, when revenue is earned may not be the same period when the cash is received in. So for example, if a business was on a 60-day payment term, then the revenue might be earned in June, for example, but the cash may not be received until August. If you would like us to do a video on cost value reconciliation reports that look at revenue and cost recognition, please let us know in the comments. So let's get back to cash flow forecasting. This is what a cash flow forecast might look like. The graph shows the net cash position for this example project on a month-by-month basis. When the cumulative cash inflow exceeds the cumulative cash outflow, a business or project is said to be in a cash positive position. And when the outflow exceeds the inflow, they are said to be in a cash negative position. So if you're getting any value from this video, please help us out by hitting the thumbs up button just to let YouTube know that you're enjoying the content. Right, so let's look at why a business uses a cash flow forecast. Now, a cash flow forecast is a very important document as it allows a business to predict whether or not it will run out of cash. Now, if a business runs out of cash and it cannot secure any external finance, it will become insolvent. Now, it's important to remember that even profitable companies can go out of business if they run out of cash. Now, cash flow for a construction project is extremely important. And the goal should always be to maintain a cash positive position. Now, an example of how this might be done is by negotiating short payment terms with a client so the cash is received in before it needs to be paid out. Now, by maintaining a cash positive position, it enables the company to finance the construction project, it enables them to procure materials, to pay wages and salaries, and also pay the supply chain partners. So let's have a look at what a cash flow forecast does for a business. It identifies any cash flow problems. It helps ensure the timing of any cash inflow is sufficient to meet the timing of any cash outflow. It identifies problems where customers are not paying on time. It allows businesses to see if they're meeting their financial objectives. And it also allows a business to track against a profit and loss statement to ensure that the reported revenue actually turns into cash receipts. So if you'd like to know how to compile a cash flow forecast for a construction project, please let us know in the comments. Now, I hope you've enjoyed this video and you found it interesting and it's added some value. And if it has, please consider subscribing to the channel. And if you do, remember to hit the bell to get that notification. Thank you for watching. It's been great to have you. This has been Constructacademy.